down, Wall Street Willie. What is socially responsible investing? Socially responsible investing, or SRI, is investing in companies that have a positive social impact. For example, companies that focus on green energy and sustainability, reduce their carbon footprint, use ethical practices, or give back to the community are considered to be socially responsible investments. Socially responsible investing has soared in popularity in recent years. Do socially responsible investors care only about making a difference? No. Socially responsible investors look at the profitability of a potential investment along with its impact on the world. Many people think that in order to invest in companies that are good for the planet, they have to sacrifice investment returns. But that is definitely not the case. If you do your research and choose a good stock or fund, it can give great returns even if it is socially responsible. I heard about something called ESG. What is that? ESG is a type of sustainable investing where investors evaluate companies based on environmental, social, and governance criteria. Environmental factors include carbon footprint, pollution levels, waste disposal, etc. Social factors include employee diversity, consumer protection, animal welfare, etc. Governance factors include transparency with shareholders, executive pay, board composition, etc. How can I invest with social responsibility in mind? Instead of investing in individual socially responsible companies, you can invest in a mutual fund or ETF that invests in socially responsible stocks. That way, you will be diversified without having to buy individual stocks. When investing in a socially responsible fund, it is important to do your research and figure out the exact methods the fund uses to invest. You should only invest in funds that have philosophies that align with your own. Should I become a socially responsible investor? Having a socially responsible fund in your portfolio can be a good idea. In addition to supporting good causes, it makes your portfolio more diversified. However, for now, it is best to avoid having your entire portfolio centered solely around socially responsible investing, as that could severely limit your options. Thank you very much, Wall Street Willie. You're welcome, Super Cooper. Remember, finance is your friend! If you enjoyed this video, check out related videos and playlists in the description box below.